Well, hey there, everyone, and welcome to your nightly video. We've got a market that has done some great things in the very recent past, and it's a culmination of insights using Rob's tools like the ITP, TRP, my tools like the Triple S, and all of the incredible Wealth Chart member exclusive indicators to help us with a market signal, and then use scanners to identify individual targets. Now, we are looking at a bigger picture time frame chart of the SPY, the S&P 500 ETF. The candles are daily candles, and it goes back over here to 2022 or late 2021. We made highs in the market for the SPY at around $480, as you can see. Lows back in October of 2022 and around $348. The halfway marker was something that you heard me start to talk a lot about, and resistance lines that you heard Rob start to talk a lot about when we were approaching and going back to the last week of March, providing the insight that we're rising into resistance, but using the tools at that time, and even more importantly now, to identify whether or not the probabilities were to come up and try to break that halfway marker back. And that halfway marker is $414 and a nickel. Now, we obviously did that and remained steadfast in our insights throughout this yellow box that I've drawn on the chart, and punched up through it several times, and finally broke out. That breakout happened middle of May, back tested the breakout with one scary day that still kept us in that zone and allowable for up, and the rest has been history. Now, the reason I've got all these tiny little lines going through the center of the screen is I overplay the idea, or not overplay this, I superimpose the weekly pivot lines on all of my charts. Why? Well, the reason is they can act as really good support, resistance, continuation, or pivot areas overall. So you've got the weekly pivots here. The center of the weekly pivot range is the blue line and the purple line. The green line that's running through there is actually a Fibonacci retracement. Kind of like the 50%. It's an important one, the 61.8. We're obviously well above it. Now, you know that we are looking at a chart now that's a daily SPY chart, and we're above the top of the weekly pivot range, which was set at $435 and 41 pennies. So are we so far away now that it must come down? So lesson one, markets don't have to do whatever we want, and overbought can get overbought. Or momentum traders like a high overbought type market, as long as we're continuing to remain on trend. But how high can it go, and where is it likely to stop? So therein is an opportunity to use tools to give us an edge. You're now looking at a chart of the SPY. It's a daily candlestick chart, just the same as what we were looking at moments ago, but it's got our technical indicators overlaid on it. So you can see the congestion, you can see the negative divergence, you can see the breakout, and that's all still action that has happened well above that 414 area. We've in fact, had buy zone areas that we've been in going back to the very back end of March. So that's why you've heard Rob and I talk extensively about this, and in our live trading use these tools to help us make better decisions. Now, the buy zone that we are in right now on the daily time frame slowed down, obviously, had a pulse up, had some negative divergences with the divergence tracker. These are exclusive indications available for wealth charters only, not everything on the page. Now, the ITP, the Triple S, and the TRP are add-ons, but what you're seeing here with the work that Rob has done over decades and made available to be used on Wealth Charts, things like the Champion Trend Pack are part of your standard membership here at Wealth Charts. So when you look at the buy zone that we're in, and the fact that we broke out above negative divergences, and you know that we are stretched, okay, you can look at it on standard tools to tell you that, but our tools are able to give us a precise target zone for where the S&P can move up to. And if we look at that and try to put that into context, well, after today's move, okay, let me just give you a sense of, after today's move, where are the lines and levels that we can move up into? So 432.75 is a target one. From a TRP buy signal at the back end of May, before we broke those negative divergences. And we've obviously seen target one being met. Now, there's a midline target over here, and there's a target two. That's sitting at around $445. It's more likely and more often than not in a bullish signal state like we are in, with the breakout forecaster riding above the speed lines, broken negative momentum shift. Subchart indications are positive, including the TRP buy cross. That dot's been in play since the beginning of the month. And you can see the lines rising into the upper portion of the channel, but not having topped yet. This all culminates in what? It's likely that we go higher. It's more probable that we would meet with the midline target, slightly above there, and then pause. But the beauty of the TRP indication when it's combined with the Champion Trend Pack, with the ITP tools, with the Triple S, is it can give us a definitive entry, stop, and, of course, where to expect in terms of targets and whether or not it's continuing towards that target. The TRP crossover lines are saying, yep, it's likely going to continue higher. Okay, doesn't mean it has to go directly higher and just stay pointed up for days and weeks, but it can take a pause and continue. The state that we're in with the Fed tomorrow, my expectation is that we do grind up a little higher. We end up getting a market that gives us a move. And let me actually just refresh the chart so you can actually see because I'm noticing that the data was as of end of day yesterday. So it's going to refresh right in front of you right now. And look at how fast that popped up. And I'll give you the actual price as of now. We've actually made a move very close to it. Now, the SPY right now in after hours trading at around 436 bucks and 64 pennies, 67 pennies. You can see that right there. We're within spitting distance to that midline target, and the expectation would be ahead of the Fed. Any further rise is probably going to pause at the next target line. But did you have that target in front of you as well? So my view is that we come up to here before the Fed, but as the Fed event transpires, my expectation is it's not going to be a horrendous event. It could actually be a little scare and then a rip higher potentially. But we'll evaluate that with more rigor tomorrow afternoon for members of the active trader room and on wealth charts. Overall, this would probably act as a resistance line, but we haven't made it up there yet. So minor rise to this area, likely a minor pullback, and then a continuation to target 2 is what it is set up to likely follow through on. And I'm going to be looking forward to sharing my insights on tools like these and the outcome of the Fed and the tradable items, which we do all in advance for members, of course. I'm going to be happy to share the insight with you as well in videos just like these. The only area that I do want to point out that may have some potential upside opportunity are things that have slowed down but carried the rally up, like FANG stocks. If we end up getting a less hawkish or dare I say it, a more dovish leaning statement from the Fed tomorrow, there may actually be a cause to look at the NASDAQ FANG stocks with some more scrutiny to look for another, bigger leg up potentially. Now, I don't want to, stick my neck out there too far. I'm just going to say that's one of the ways it can play out. And it's these technical tools that are going to tell me whether or not I have a higher probability of participating, of it happening and participating in it, and where to get out. That's the beautiful part of the tools altogether. Have an incredible rest of your day. Thanks for watching. Looking very much forward to seeing you in videos just like these in the upcoming days. Bye for now.